Ladies and gentlemen, the reason why I teach everybody, I teach us how to trade and all of that. Now, this is 15, this is 5 minutes, for instance. This is boom and crash. So I'm doing everything. So whatever concerns you, you will take it. And however, apart from what concerns you, this is what we call there's so many things we call this thing. So, but let me just go straight away. So you can just identify this place as a swing low, right? And as a support or resistance, and then you have another one here, right? Now, understand one thing very importantly. So here is resistance. So now here is support. So now, so you are going to trade within this zone. Now remember, this is boom and crash. I don't bother trade this. Be careful. I don't bother trade this. I wait patiently, and that's why when you are trading boom and crash, you must really have patience and take one and follow it. If not, you missed everything. The best I recommend for beginners is boom 1000. Now here, this guy have spike in 1, 2, 3, 4, 5. This is 25 minutes consecutively, just a little pullback move. That's about how many points so far? Let's take from this candle. That's about 26 point to 28 point. If you enter one position, you have done $28 within 25 minutes. Now, for people who have big account and could do like 3 or 4, will have made more. Okay. What will have informed your decision will be candle pattern. This is a candle pattern inside bar or whatever. And then, so here, but don't get it twisted. It can spike before here, but you are looking for a spike on top of this place, right? And that's why sometimes you want to use like some EMAs, like I've told you. So let's use 3 EMAs. This is algorithmic strategy. So this is 200. Okay, I'm just doing this one very fresh so that, okay, you can get it, just get this done. 200 EMA, take off the label. Okay, so this is 50 EMA. Okay, 50 EMA. So that can be green, and maybe it's a third layer. I'm going to take out this. Okay, then the third one could be 14 EMA. Okay, could be 14 EMA. 14 EMA. No, this is boom and crash. So let's use orange, and then we'll take it to this line. Okay, very okay. So now let's go. And remember, we'll say you can use MACD, irrespective of the market. That is boom and crash or this. So now this is this, and you already seen a kind of market activities. Your own target ordinarily was that the market should spike on top of 200 moving average, right? All right, it should spike on top of this the other block. Oh, it has spiked already. Okay, so most line. So you probably want to wait because it's above 200 moving average. Okay, I just wanted to say that sometime at the cross of 50 moving average, it spikes. So now, but whichever way, now when you're able to wait for this market to come down here and you find a position you long, sometime it come here and crosses before it spike, but you are taking a position and all of that. Why I want people not to take trade on 300, because one standard is $1. So if you are running loss, so imagine now if you have long and then the market is against you by this, that's already $5 to $10 or something, depending on how many positions you enter. So, but this is the best I recommend for everyone. Boom, 1000. So I'm just, come on, oh my word. I was not around. I will have taken some trade here. Okay. Sometime when I'm not finding what I'm looking for. So I could go to 3 minutes and be able to find what I'm looking for. So, but in other words, what you're doing basically, if you look at this is 15-minute time frame, it actually spike on top of 200 moving average and all of that. Now, most time when you are going through all of this, just like this here, this market could crash down to as low as this point. Remember, I say you mark swing low, swing high, right? This is 15-minute time frame. This is 15-minute time frame, right? These are point. Important point is you are taking note of. This is 15-minute time frame. So ordinarily, you will have find a kind of swing high here. So now in this case, you expect the market to return back, but because of 50 moving average, it likes spiking at 250 moving average, 200 moving average, and all of that. So let's go to 3 minutes. Sometime I go to 3 minutes, and I told us that when you are trading boom and crash, first, when it spike, you create a support, and then you wait for either pullback and grab this, or just a pullback and spike. In this case, just pull back and spike. That means you are entering from here, or if you miss it, you patiently wait. Sometimes like this guy now, either it will spike here, but I always want to wait for it to come down to this point. So that if I long it, you can still see that my stop loss can be down here. But you don't rule out the fact that you could miss. Okay, this is how many points. You can do the calculation of if you come down here, how much you're going to lose. 27 point multiplied by 0.2 if it's what you use. 27 point. So now that means I will be targeting up here, maybe this 200 moving average, or even at this spike. I'm just doing everything in general so that I won't even rigmarole much again. So let's go to, okay, there's a massive crash after we have long. What happened? Was the news favorable for EXY? Wow. So gold is pumping crazily. Okay. We've short and we have taken the profit. We take profit 1 and 2 before it recover back. Now, so let's go by this. We say every time frame you get in 15 minutes, you want to go to 1 minute probably to trade it. So the best I could do here is to mark this point every swing, right? So let me mark out this point here as a potential resistance, right? Or an area of importance. Okay. Then I come down here, another point here. Okay. So if I've done all of this here, so what I want in the market is very simple. Even using your MACD is easy for you. Look at where your MACD actually broke out and then you retrace here. Now, if I'm going to go by this, looking at this, if I go to 1 minute, I will have found a trade earlier than now, right? So I will have found trade earlier than now, right? So we took a trade and we took profit. This is kind of double top as it were. And then the market returned back here and then we have this. So this is a swing low. That should be my target and my stop loss above here because we're looking at 15 minutes. Now, if you go by that, here, ordinarily, you will have shorts because why? This is the first one and the second one, look at the double top, right? But let's say, okay, because looking at your MACD, you shot down here, but you may be targeting here. Unfortunately, it didn't get there. This was the best for me, all right? So if this was the best for me, so I'm just showing you all of those things. So because sometimes market can decide to be very choppy, and then you will be you will now be handicapped, not be able to see anything to do. So look at it, short the market from here, right? And your target is actually this swing low here. So if my target is this swing low, I normally don't allow the thing to get there, or even if you are doing 1:2. So 1:2 will have been here. So just few pips, somewhere there or so. That's about 17 pips or so, and then you are good. Now, your MACD already, look at this, your MACD. Where I take signal with MACD when you have a sharp kind of crossover, not a sluggish one. Look at it. And then look at your 1 minute time frame candle here, return, and then sharp back, and then pull back. That's a confirmation. This is your entry. However, your MACD already shown you that, but you are trading back to this point, right? And your stop loss is below here. So let's say your entry, here is your entry, excuse me, so long, and then here is your entry, and back to this wall. Your stop loss is here. So sometime when you are doing those capping, maybe 1:1.5, 1:1 sometime, right? So even if you take it up to be 1:1, 1:2, that will be somewhere here, your stop loss there. And because you're already seeing, your MACD2 have told you, then the same thing has happened. Your MACD had gone up, down, like this one that is falling. That will have been an entry again, because this is a massive move up and a return back to the region. So at this point, you are finding an entry, right? This is a failed rally. So here is your entry. Your stop loss is here. You will have seen above here, but that's too long, right? So for your first take profit is here. The second take profit is probably here. And the third one is here, maybe before that point. This is an entry that you have taken for 1 minute time frame, right? So you are now waiting to see how it plays out. I wish I can have a way I can log in to just show that. Okay, but just for you to know. So if we return back to 5 minutes now, you can see that that's where you have had a sniper entry, because this is already a point of interest. However, you can see that it's still like showing more a kind of strength to go up, but you have just identified in a lower time frame, and you don't need to be afraid. Be ready to, oh, I'm on euro. I thought I was on gold. I'm on euro USD. Okay, this one does not make sense. Okay, so look at it. Let me say, so that's what it is anyway, right? So let's go to Bitcoin. The same thing happened on Bitcoin just now, massive pullback, right? So this is Bitcoin. Go to 15 minutes. So ordinarily 15 minutes. This is already, you have key level. This is daily key levels that I told you people to always mark. So here is the swing high. I expect market to come here, and here is the swing low. All right, so which here is going to be my support. Okay, so here is going to be my support. So when market came down here, of course, you're already seeing your MACD crossing, and that's fantastic, right? So ordinarily, let's go to 1 minute. Okay, so if you go to 1 minute, see what you have seen. So if you go to 1 minute, remember, so going back to this, these are liquidity that you expect the market to return back to. So, but in your own case, coming back to your 1 minute, you only have identified an entry potential. This is a high that created this low, and even at a stretch, it took out this high automatically. This is break of structure. The pullback is your entry. Sometimes people want it to pull back and grab this, but this one's already higher than this. If it's not higher than this, I expect that to come back and grab the low or the same point. So because it's higher than this, your entry is any pullback here. So now, if your entry is any pullback here, so you have long, let's say probably here, your stop loss is below this swing low. You get it? It doesn't matter what the market is going to be doing. It's intimidating you and all of that. This 1.29. So now you can have multiple entry, right? Multiple entries. Uh-oh. So this is your goal, 2 point something, but you are going to now look at taking profit in sequential order. You can take on profit here. Let's look at it. You see me most time, I will mark those lines here. Take profit. Exactly if it's in Forex, right? Here, take profit. Okay? And then maybe last profit here. Right? There you go. So let's expand it. What's going on now? So let's expand it. And then let's go to 5 minutes so that you can see it more raw. Okay? So now, here we go. The market is just moving right and doing what it's doing. You can see, create a lot of fear for you. You can see after all of this, this is your first take. Okay, this is your first take profit. Took it, return back, but you are still in the market. Again, see a massive pullback, got up here again and pull back massively. Market still continue. You have not finished closing all your trade. Yeah, you have not finished closing all your trade, and the guy is still running. Now, so if you look at your MACD, these are boring momentum time because of the market activities. Then look at the 15-minute itself. A swing low and a swing high, trading to target this. Once this liquidity is grabbed, you expect a pullback. And if it does not pull back, so you want this to break this point, grab this liquidity and return, or grab the liquidity and down stay. This is a daily key level. So you can stay on this daily key level and continue to move from there again, right? Gold is massively moving up and all of that. I said we have taken profit on this, so no point. So if you look at now, one of the things about MACD again, and explain to you guys, is that as long as the MACD is above the zero line, now when it come back and bounce on top the zero line cross, it's a continuation, and that's what it has done here. And then click on here and move on. Oh, lovely. See what I've just told you? This guy, I actually want to trade. So this is 3 minutes. So on time, if I'm not finding what I'm looking for, 3 minutes. Told you, I see on top of this 14 EMA issue bands. And then this is why I love this instrument. I think I'm going to delete other instrument and face this instrument squarely. This is 55. Assuming you enter 2 or 3 position at 20 or just a 0.5. Because if you focus on it, you'll be able to put enough stuff. So 55 divided by 2, that's 0.5. 55 divided by 2, that's about $27. So, and you have 1 or 2 position, that should be the 50-something dollars you are going to collect, right? So I told you, because the way it spike, and then this is a very nice journey for this. All right. Now, so the same thing is applicable. Okay, you can see this guy now. I told you this is 300, right? I told you about the spike on 200 moving average. Remember, we are looking at it here, but from top of 200 moving average, it always have a spike sometime. And on 50 moving average, on 5 minutes, it always spike. And this one self was very, very fantastic. Why? We say when the first spike happened, you mark it out. And what you want is the market to come down, take the liquidity, and now spike up. In your own case, when it come back here and it's on top of 200 moving average, I just take 1 or 2 positions, and then afterward, if it didn't spike, if I can manage this losses that I will be recording, I will allow it to be till when it spike. This is the lovely thing about this instrument for those who are trading in any way, but it's not for everybody. That's one thing we must understand. You can see, right? Actually, spike. Let's go to 15 minutes. Okay, so if you go to 15 minutes, you may not be able to find some of those capping opportunity that you are finding. And then if you're in lower time frame, you must always learn how to, once it spike, you must learn how to take profit as appropriate as possible. If not, you'll be waiting to do longer, more money. Meanwhile, didn't do longer time frame. That could be cumbersome for you. Okay, so look at Bitcoin. So it's still pulling back because of this liquidity grab. So you expect it to move up. It's still dialing though, but I think it will still continue to move. Okay, this guy have finally crashed down and trying to find another route up, as it were. Okay, so that's one of the things. So look at Bitcoin and then gold. Okay, gold is an amazing instrument. So you can always see your MACD cross on top here. You are in another MACD start turning because you know this is a continuation. Go to 5 minutes, you probably may see it faster. And that's why I recommend that when you are trading, face one particular instrument, especially when you are day trading per time. You can diversify to other instruments, but not at the same time while you are trading one, you carry another one and all of that. So look at this one. We said we will short ordinarily. Look at it. You put a short thing, we say on 1 minute or so. That's where we found that short. Yes, and we say take profit here. That was on 1 minute. Yeah, so say short and take profit here. That's you continue, then you can stack in as much as possible. Okay. So support and resistance is very, very important. You can maximize your trading opportunity following those simple rules instead of giving yourself unnecessary stress. This guy, okay, this is 1 minute. So let's go to 5 minutes. I was still saying about this trade just now. Remember, the instrument you want to be trading is always good. You mark it, and so that you can follow up in the marking. So let me go to 5 minutes. So you will find a trade back to this point, and then that is cool money. This is the instrument I hate most. Can be sluggish, eventually will give you loss. Look at it. I was on in and then it was running very well. Now look at it. You will eventually sell, but can be very traumatic. Look at it, what has been doing because still above. So it crosses here and then we already say we're good to go. I think I will stop trading that instrument. Or if you must trade it, you probably just wait for it on 1 hour consistently. And then you can find an entry when it shows only give you good signal 1 hour. You can come to 5 minutes and take the trade. So you can see this that I said. But if you are not facing the instrument you are trading per time, you will miss out of all these chances and opportunity when they come out because you are, gallivanting, and so that will not make you to see them when they are obviously out. Okay, so that is what it is, and then imagine when this market came down here, profit had been taken, and your MACD already showing you this, and you already, of course, this is that's why I say facing one instrument per time is very important. So imagine you now, you've probably have find this. Now it has gotten to another area of importance. How do we know? Look at it. This is like potential resistance. Now it got here. You want to see your MACD too to react and all of that. And then you want to see other the chart pattern, sorry, the market, the price action, and then probably you can short down here. These are the ways. So you mark support and resistance, then you find an opportunity. This market, I was on it since 2 days. Yes, so when it came down here, or sometime when I'm sending out to Signal, actually, if my own is larger in stop losses. Okay, so that's the simple thing. So you are looking at it now. That it will push out. Okay, so it's looking like it's going to push out. But look at even your MACD as the cross is still opening wider. So you may now push up. If you push up here, so imagine you have entered here. Look at why will you enter here? That's why I say facing one instrument per time is very important. Number one, you have short the trade, you have taken your profit, right? You have short the trade because I short the trade from here and take profit. I think took profit two places. Now you will expect it to get down here, never got down here. What happened? This is what we call hammer. Then the next thing your MACD is crossing. This is engulfing. Probably this is your entry. And then if that's your entry, for instance, here, then your take profit definitely will be here. Of course, this is your stop loss. But at this point, you are just capping. Your stop loss may not be too necessary because you are watching. This is 1 minute. Oh, 15 minutes. Oh, I thought I'm on 1 minute. Okay, on 1 minute, you will have found an entry earlier. Or your entry will have been, this is a low on a high and a low. So your entry will be here or this drop. So your stop loss, however, here, and your take profit here. So you still on 1:1.5 or thereabout. Okay, so please, ladies and gentlemen, that's what it is. And so follow the instructions and always